Yo, what's up, Outliers? Just ran in here, running a couple seconds behind. We got a new TV soundbar that I started trying to unpack and get all hooked up. Pretty stoked on it, but there's a time and place for getting that set up and for looking at the markets, which is what we're going to do now. So, welcome in, everybody. So, what time do we got? We got like 2:02. That'll be our kickoff. The game plan for today is really simple. The first thing I want to do is run through the markets pretty quick, maybe spend 20, 30 minutes rolling through, seeing what we're seeing. Futures are up right now. So there's a couple things going on that I think are broadly interesting that we can start with. And then we will pivot from there into the skill development session, which that is now Wednesdays. For those wondering what that's all about, on Wednesdays now, we're spending the tail half very purposefully working on a skill of some sort, not necessarily in a particular order, but the last two kind of are. And then for those that are in the Outlier Patreon, the pro side, then tomorrow this will expand into an actual case study where we will go much further into detail and focus more on like the practical application side of things. This is more to introduce the concept so that everybody has an idea of, the skill that we're talking about itself. So that's the game plan here. The skill development segment for later today is going to be about building a scalable trading approach. And there's a bunch of things that I want to talk about with respect to that. I was actually taking notes on it last night. And it's because there are a lot of things that go into this process. I have like 5 major bullet points that I want to talk about. We're going to go through the path that most traders take, common mistakes that derail our ability to actually scale our overall trading approach, and then setting a foundation for something that we feel comfortable with scaling. So that's what we will get into on the tail half of the session. Let's see who we got in the house. Looks like we got Hader, Reese. We got Tommy, Lauren, Travel, Shamgar, which is becoming quickly one of my favorite things to say. It's just a fun thing to say, I think. And then we also got Dark Mark, Paulo. Beautiful. We got the gang in town. So let's take a look at the markets as a whole to start. We can see that the S&P 500 had a little bit of a down day, but it has been on an absolute tear. So recently hit a high, 610, fell off, and now it's been about level set. Big Daddy J Powell was talking earlier. We held rates. I don't think there was any shock there. Some of his forward guidance, I think, is somewhat topical because it started highlighting a little bit more of an uncertainty element for the future, but overall, pretty low impact on the market today. I did trade volatility around it because the volatility was still there, but yeah, just not a whole lot. Then for the Qs, we can see tech is following a very similar pattern to the S&P 500. Small caps is still just sucking wind. Small caps cannot catch a bid. If we take a look at the movement in IWM on a slightly longer term time frame, actually, even better, let's look at it in here, and I'll change this grid. We'll do like a 4 by, and then let's do SPY, let's do QQQ, let's do IWM, and let's zoom these out. Notice the difference. Everything from the slope of the standard deviation channels out to the behavior that you see in this entire time frame, small caps have been in a massively consolidated position for some time now. So you can see if we take a look at IWM down here, it's essentially been range bound in this time frame here. And then it started rallying up and out just a bit. But even on this move, in terms of severity, it's very light. So if we grab from like the midpoint there, go to the midpoint here, it's about 13% move from when it actually started to rally. If we take a look at the comparison from SPY in the same thing, 44% move. So Small caps have not been the place to be for several years now, realistically. Q's is 51%. The reason why I bring this up is because when we're trying to figure out, especially for me, when I'm trading something like the coverage triangle, I have to figure out where the money should be. Where's the best place to commit the capital for obviously the optimal return that I can find? And it's not small caps. And small caps are becoming a bigger question mark for me, to be honest with you. Now, if you take a look in terms of volatility, small caps absolutely maintains much higher volatility. This is on display in terms of why I generally like to trade something like IWM. Is if you take a look at the average daily ranges, or average true ranges, I should say in this scenario, they're much higher than the other two. And it is much better diversified. The problem is that even something like IWM is going to be tied to what the broader economic landscape looks like. And what the broader economic landscape looks like right now, obviously, is very rate focused, and rates are kind of like the kryptonite for small cap companies, small banks, all of those kinds of entities that exist there. So that becomes really important to keep in mind from when you decide to start coming up with thematic positions. We can kind of identify that small caps are a questionable place for more thematic positions right now. You can find volatility there. It's good for that. But for trying to trade more of like a positive drift style thing, I think it's a much harder sell. So weakness continues there. Now let's take a look back here, see if anything sticks out to us. Comm services up big. Financials hitting new highs. Do I still have that on? Yeah, so I still have the Visa ratio call diagonal right now. It's just long calls, but I still have that on. And there was a couple that I put on over yesterday, following up on the stream yesterday. There's some stuff that we saw some really interesting, unusual options activity in, but overall, not anything looking too spicy. But financials are something to keep an eye on for upside, because now it's essentially challenging prior highs. Obviously, it posted term highs here on a 3-month time frame, but you could see that it reeled back on this little tiny candle. So if it can sustain that, then all of a sudden financials start to look another interesting place to start allocating money, along with comm services for upside plays, industrials rolling over. Take a look at tech. Tech ain't happy here. And this is funny because if we go back to NVIDIA, we talked about NVIDIA on Monday, and now we've had a couple days to see what it's done since. And NVIDIA right now I haven't redrawn these from when we first looked at this, right? And essentially saying this looks like the range that it needs to figure out where it wants to break in. And I have to be honest with you. I thought on this breakout, I thought today it would have had a little more continuation that I did not see. So that starts to add some questions in my mind as to why would we have had this really strong up day and then just a complete lack of follow through on the next day. Like that I really think is slightly telling. And telling in terms of the way that people are trying to position in something like NVIDIA. People are not super ultra bullish in here right now, unfortunately, which is a pretty big change compared to what it was in the beginning. Also, is the stream laggy at all for you guys? Because I'm looking at OBS and it looks generally okay. But after that issue yesterday, I want to make sure that it's actually behaving as it should. I might need to turn this down potentially. Overall, is stream coming through decent? Okay, cool. Thanks, Paulo. Yeah, great. So that's how I'm thinking about NVIDIA. Range bound here until we see a clear break above either of these. Once we see a clear break above either of these, then I think we start to have a defined trend that can be traded either direction, up or down. Now, still for longer term investors, unequivocally, great investment opportunity. I still think this is a great investment opportunity. There's the way to think about this from an investor's lens is in 5 years, is NVIDIA likely going to be worth more then than it is now? And I would feel pretty confident making that wager to the upside. And that's just because of how well NVIDIA has been positioned to be involved in essentially everything that happens with all of the technological innovation that's occurring right now between AI, AGI, general robotic, like every sort of big adoption or innovation within tech is essentially using some sort of NVIDIA product, whether it's processors, chips, so on and so forth. It's heavily involved in the total space. So from an investor's perspective, to me, this is like a no-brainer. For traders, again, we need to see some sort of movement. And right now, it's not really showing a whole lot of that. From a risk premium perspective, it doesn't look good, not touching it from there. And what I mean by that is the total amount of risk premium given to the average size moves that you're seeing on a daily basis is crazy. So if you take a look at the average daily range for a 5-day window, it's 6.83% average daily range. This is not average true range. This is average daily range. And average daily range does not take into account these giant gaps overnight. It's talking about the daily move intraday. So 6.83% on a 5-day average ADR. Take a look at the 90-day, 3.63. So it is massive volatility compared to what it tends to be. And right now, it's not really being priced in enough from a short-term vol trading perspective, unfortunately, because otherwise I would much prefer to be able to trade something like this. These are where you can get really, really interesting opportunities from a vol trading perspective, but not always. And it's because right now it's still just moving too much. It needs to chill TF out before it starts to look more attractive. Take a look at the average true range, which is 5-day is 9.41%. The 90-day is 4.42%. Over double the average true range, which obviously accounts for overnight gaps. So volatility in NVIDIA has jacked up significantly. And while it's doing that trending sideways, it can look kind of lucrative from a vol trader's perspective. But my hunch is sooner or later, it's going to get a break one way or the other. And I still have to maintain a slightly longer term, a slightly bullish leaning in it just because of the company and where it's at. But yeah, we'll see. Now, let's take a look at a couple other common tickers right now. SoFi, same. Honestly, SoFi, unimpressive here. It had earnings. It beat earnings slightly, and the stock just didn't care, unfortunately. I was hoping to see a little bit more of a kickoff for a positive drift, which isn't the case right now. So I'll actually drop a couple alerts here to see if it does end up breaking. I still have a long side bias in SoFi. I don't have a position on it right now, but my general bias is more long, but again, just right now, not really suitable for a position. And then there's not PANW. That's not what I'm thinking of. We'll look at it, but Palantir is what I wanted to look at. But this does not look good. This looks bad. Why does this look so bad? This starts to look like a short candidate, doesn't it? Why does this look so bad? What's wrong with them? I'm trying to figure out what the deal is. What did they say? Oh, is this a video? Any idea? Reese says ADR versus ATR. What's the difference? ADR is average daily range. It looks at daily moves. ATR is average true range. It accounts for overnight moves. Reese says move sympathetically with NVIDIA. Not really. I don't think that's true. Let's take a look. We'll do a top bottom. We'll do PANW, and then we'll do NVIDIA. Yeah, I don't really think so. NVIDIA had that big drop on the 27th, and this had an update on the 27th. I'm just curious why it's down so big today. It's down almost 4%. Anyways, I don't really care that much. I'm just curious. Weird. And then let's take a look at Palantir. Better, but not good still. I really don't care for how the support is just petering out as it gets up towards this top. Let's take a look at a couple other examples of like recent directional moves here. So DVN, we talked about this. We talked about a perspective breakdown below this specific candle, which starts to signify, in my opinion, a lot of downside weakness. And we actually got not a big move, but we got an okay move in a relatively short-term time frame. Now, the cool part is with options, you don't need a big move. That's the whole point of trading options for directional stuff, is you gain leverage. So in this case, it actually worked out pretty well. But this is something that like had a clear break and then continued through the break. Today it's consolidating. I've already exited the trade, but this still looks generally downside focused, and there's some pretty clear continuation in that direction. This is strange. We see a rally, gap down rally, back up. Like that's just really strange stock behavior. And it is coming into earnings, which another thing that you typically see for companies as they're coming into earnings cycle is they kind of trend sideways coming into earnings more often than not, barring other news not being there and stuff like that. So that's just another element in here that drives at least some level of curiosity from my perspective. This still isn't suitable for a directional trade, again, for my trading windows. Longer trading windows, again, probably fine. I think Palantir is probably really well positioned in a longer term time frame. But I think on a shorter term time frame, it's not ready yet. The name of trading is striking a balance between learning when to trade and when not to trade. And there are plenty of periods where it's literally better off not putting a trade on in something, even if you have a idea behind it or some sort of thesis. Again, like Palantir, if somebody were to ask me, where do I think it'll be in 3 years? I think it'll be higher for sure. And the reason why I think that is just because of where it sits in terms of the contracting space, and it's doing a good job nuzzling up to the money printer that is federal government. But short-term sentiment is a little bit sporadic here, which I can't help but find slightly curious. Let's take a quick look at futures. So E-minis are up a little bit. Russell is up almost half a point, kind of leading, which is fucking weird. NASDAQ is up almost half a point. That doesn't make sense to me on a relative basis. VIX down half a point. Bitcoin still hovering around that 100,000 range. Gold really not changing. Crude up just a little bit, but massive downtrend. My guess is you'll continue to see crude run down. Actually, that leads me to a need to drop an alert in here. I had a crude trade not that long ago, and then I took it down, but I still think with the overall near-term expectation for Trump policies is obviously likely oil prices will continue to contract to a degree. Nat gas, big gap down, fucking everybody's day up as nat gas does. Went from 3.7 down to 3.1-ish. Good. If you trade nat gas, you should never be happy. That's the nature of trading nat gas. And corn is still on an absolute tear. Huh. Curious. Very, very curious. Cool. So let's take a look at overall market internals now and see if anything sticks out to us here. I don't know about this whole Meta. The Zuck rebrand has been fucking crazy. He really does look like a straight fuckboy. Like, at first I thought that there was a couple, joke adulterated images that were put up of him, but like, he really is, not to comment, I don't know. It's like, I'm not trying to comment on his looks because I don't care that much, but he does have that vibe. Like, he really, really does have that vibe, which is just, I don't know if it's just me. But yeah, this is just weird. He's gone through like a very dedicated rebrand though, which is really interesting. So let's take a look through Meta earnings. So where are we at? We're at 23. Be the year when a highly intelligent personalized AI assistant reaches more than 1 billion. I expect Meta AI to be the leading AI assistant. So they came in, god damn, 20.8 billion. It's just so much fucking money. 802 a share, solid, up 50% year over year. Man, you want to talk about like driving value? Revenue's up 21%. Here's the crazy thing. These companies have been growing at this pace for some time now. It is insane how sustained these moves have been. Absolutely insane. Market is showing up like 20 points. It was expected at a 50-point move. So right now within the expected move on the straddle. But man, what an absolute crush. They were expecting 676 and they came in at 802. So again, this might be a case where we could see post earnings announcement drift even in mega cap companies, which has become more and more rare, which is just so strange. Lauren says he gives 90% of women the creeps too. Well, he's married, so I feel like y'all are safe. He doesn't seem anything bad like that. He's just awkward. But I mean, I'm awkward too. We're all awkward in our own way. Think of it this way. He started as a tech nerd, right? That had a cool idea that has now become one of the most powerful companies on planet Earth. It's kind of like when you look in the corporate world and you see a lot of people that are in managerial positions and they've never actually been trained on being a manager. They just kind of, stayed at a company long enough and they slowly got promoted. And like, they might have been a really good individual contributor, but then they get promoted to manager and it's kind of like, you're not very good at this. It's like, he's not trained. Well, he's been in the role long enough, right, to figure it out at this point. But I think a lot of people's criticisms of him early on, it's like, I don't fucking know what I would be doing if I ran, a company this size when the original idea was something pretty mellow. Like, it's actually funny. Somebody they were asking me like, what would I do if the YouTube channel started to like actually blow up, meaning just like really aggressively grow? Because right now it's been growing at a very steady rate and it's become like a comfort zone for me, right? Because when we do streams, I see familiar names. This is like it's a little safe space, right? Comfortable. But you can just expect if things started to scale massively, how much stuff that starts to change. One of the things that's really cool about being a smaller YouTuber is most people that pay attention to the content, they actually care about the content and the information and they understand the angle that I'm coming from and so on and so forth. which that's not the case. As you become a bigger YouTuber, you just have people that have fucking opinions that just want to say their opinions of you. And like, you got to start dealing with more of that. That still happens now, but not anywhere near as much. So it's like, there's a lot of big changes that can happen that you're not necessarily planning for or going into with the mindset of. So like, when, I don't know if you guys heard him on the Joe Rogan podcast, but it was really interesting because I had such a terrible perception of him on that podcast. It sounded so hard, like somebody that was like trying to come off as normal. And it just did not come off that way to me at all. And this whole idea about like the censorship stuff and all that bullshit, we don't have to get into, you know, all that nonsense. But the main thing is he like flip-flopped on it, right? In my opinion, he's talking about how, you know, the federal government compelled him to do certain things, take certain stuff down and, you know, that kind of stuff. And now afterwards, he's saying, he's like, well, that's not right. We're not going to do that. But then it's like, well, that's what fucking happened when you were there, right? Like the time to quote unquote stand up and do something is when it was happening, not afterwards that the landscape has changed. I just bring all that up because it strikes me as somebody who's still trying to identify their values and like the values that they want to apply to the broader company, which includes things like, how does he balance criticism? How does he balance things, you know, him making unpopular decisions and stuff like that? It's fucking weird. So yeah, I do give him a little bit of grace, I guess, mentally, because he's doing a lot of stuff that I'm not exactly sure that he got into this to do, but it's just fucking part of the job. Hater says his value is to make more money. See, like, that's the thing. I actually don't really agree with that, to be completely honest with you. There comes a point where you have so much money, and it's actually money it's way less money than he has now, that becomes just disgusting excess, that it really is not about the money anymore. You don't even care about the fucking money anymore. That becomes down, like, in my opinion, that's tied to more stuff like power or just cerebral interest in something, whatever it is. But there's absolutely other drivers than just trying to make more money. Like, he has more than he ever could have needed, which again, that's also why I'm so confused about the thing when he went on Joe Rogan and he was talking about how he wasn't comfortable with what the federal government was asking him to do around the COVID vaccines and all that kind of stuff. But it's like, I just don't understand. If you're that uncomfortable, why the fuck did you not make the decision then when it mattered versus now? I just really don't understand. So, and me probably won't. There's obviously a lot that he's thinking about and contending with that none of us will have any idea of. But I just find that all very strange. But like, this, I think, is interesting, right? Because we're starting to get an understanding of where he's weighting things and what he really wants to see grow and what he wants Meta to continue to become. Because if you remember, the whole idea of Meta was tied to the metaverse, which I haven't heard shit about the metaverse. I don't know if you guys have. Now, I still think metaverse is still going to become an increasing thing. I still think there's a lot of potential there, but it was like this crazy buzz that everybody was all on about. And then I just haven't seen shit about it. So to see the way that, you know, Facebook went through that original rebrand, and obviously Meta is not tied specifically to the metaverse. Meta is tied to Meta, right? A much more meta concept. But I think I'm trying to understand more and more about where the company's trying to take things. Mel got me these Meta, what the fuck is it? It's like these Meta Ray-Bans. They're just glasses. But at first I thought it was going to be like augmented reality of some sort, but it's really not. It's just kind of like a glorified, it can, like the sunglasses can take pictures, which I would never use. What I use those glasses for, which is actually a really nice thing, but it's when I do the hot tub so that I can listen to something and not have it playing out loud. And I just play it there instead of like earphones, because I don't like earphones when I'm outside. So like that's interesting. But that doesn't, you know, that's not like a big weight for the company. Actually, let's take a quick peek at a big weight. I want to know what most of their value is currently coming. There you go. 97% from core Facebook advertising. I wouldn't have expected this, to be honest with you. I absolutely knew that advertising obviously would be a dominant part of the business for sure. I didn't realize that it would be like 97% of the business. I thought that they would have some other irons in the fire. This does start to make a little more sense, though, with the decisions made during COVID. If you think of it from trying to protect this as the core business model, I can actually start to see that a little bit. Wild. Absolutely wild. So yeah, it's primarily from ads. Not even primarily, like overwhelming majority, I should say, from ads. Fucking crazy. Cool. Anything else we should take a look at quick before we pivot over to skills dev? I'll grab the pro workbook really quick just to see if any of you all had questions that we need to answer. It looks like we're good. We're good on pro questions. I don't see any trades that we want to hit, so that's ideal. So we are here now on skill dev. Let's grab this, drop that in there, and keep the formats. Cool. EIX? I'll look at EIX because I don't fucking... What the fuck? Yo. What the fuck am I looking at right now? My brain is trying to comprehend what the hell this is. Okay, let me take a couple guesses. This looks like some sort of deal fell through, some sort of big approval didn't happen, or maybe a failed M&A. I don't know if anybody knows. We'll find out. But like, the reason why I'm saying this is because the stock has been rotating between 88.5 and 80.5. So a 10-point range, or I'm sorry, yeah, 10% range for months. And then this started it. And then this just got massively accelerated. Paulo says utility company being sued for allegedly causing CA wildfires. Boom, there you go. Legal action. That will do it. That would fucking do it. When did that happen? Let's take a look at the 8th. I would expect to see something around the 8th. Yeah, boy, look at that. You're fucking spot on. Nice job, Paulo. That's exactly correct. Southern, oh, man. Look at this. That's exactly correct. Wildfires are prompting power shutoffs. Let's see. Trading lower amid wildfires in California. Is this normal? Oh, fuck. Sorry, we have to go on a side quest, everybody. Let's take a look. Create a list of publicly traded utility companies that have operations or that provide service in California. What I'm doing is I'm getting a list. I need to update everything because now we're definitely going to go down a little bit of a side quest here. So we're at 37 minutes. We'll call it side quest. And we're going to look at CA utility wildfires. Have to know. Too interesting. So for those that don't know what I'm doing, I really want to know the relationship between these publicly traded companies and why is EIX not on this list? I want to know if there's a relationship between these companies on average and wildfires, because if so, that becomes a tradable event. Okay. So next, create a list of large wildfire dates that impacted California. The reason why I'm taking the time to do this with you guys, just in case, like, this is how you come up with ideas. This is exactly how you come up with ideas. This would be a less utilized idea potentially, but nonetheless, this is the process of being a trader and looking for effects that you can trade. This will be called the California wildfire effect. So what I'm doing is I want to see if there's a normalized relationship between these. So there's PCG, so we'll have symbol or ticker, PCG, SCE, SRE, EIX, DWT, which is water, SJW, which is water. So these are nat gas, electricity. These two are water. Okay. Provide the specific date fire started for each. So now what I'm doing is I'm figuring out the actual date that each started. So fire date. Format as a table. Copy paste. Include the total acreage and estimated. Well, so what we're gonna do, slightly reformat. I could have just used transpose, but I'm being a simpleton. This is actually probably a decent focus pick for. All right, let's. Perfect. So right now you can see I'm essentially using ChatGPT, right, to help me. I'm figuring out when the actual dates were. I'm figuring out the total severity for each fire. And then I'm figuring out whatever the, estimated cost was associated with each. And then what we can do is we can take a look at the ticker performance around these individual days. Now, if I were doing this from a data, like an actual data analysis perspective, what I would be doing is just grabbing the stock data for each of these and quickly overlaying them. We literally can just eyeball it really fast, just because I don't want to burn too much more time on this here. This will be something I'll probably finish as extracurricular, you know, for your boy. But let's take a look at a really long-term time frame. We'll look at 10-year. Jesus. We'll take a look at a 10-year monthly. And let's take a look at, so January 7th, obviously. Let's take a look at 13 July of 21 here. So might be something there. The 16 Aug of 20. Might be something here. 8 Nov 2018. Clearly something here, right? Do you notice something so far? Like, this is actually already something that I care about. So there's a clear effect here. Just fucking eyeballing one of these. Let's go to do one more. Mendocino, hey, that's not that far. That was a small one, 257 million, but that one is 27 July 18. That one didn't register. And then 4D17. No shit. That's kind of big. If you look at the largest candles on this, at least a not significant sample of them are tied to wildfires. So I'm actually going to stop doing this so that we can take a look at this more closely together. But what I can tell you, that's a tradable effect, like for sure. Super fucking interesting. There you go. Pro tip on how to create and find tradable effects. Now, let's pivot over and let's talk about this other topic, though. We'll keep that on our scratch chart. And let's add another scratch. Now, the session for today is specifically tied to figuring out how to develop a scalable approach. And there's a few things I want to cover first, and then there are a bunch of questions and stuff that I have for you. So if you are able to type in, I would love if you're able to type in as we go through this, because I want to kind of tailor this depending on the responses that we get. I think that that's generally more interesting and more useful, hopefully, for you. So let's take a look at this. We have to grab our little drawing pad. There we go. Let's talk about this. What does this mean? A scalable trading approach. As always, we're going to start with an orientation. In a nutshell, this entire concept is to try and give more context for the average trader so that they make better decisions. The average trader will very often kind of commit a series of absolutely terrible choices. And it looks a lot like I'm just going to grab a trading account and I'm going to start trading and I'm going to hope that it works. Right? That's the idea. And the reality is, obviously, that's not how trading works. It's just not how this thing works, thankfully. So the idea of trying to build a scalable trading approach is as we talk about all the time, the basics, right? Understanding the challenge, like all that kind of shit. I don't really want to belabor those points because they've been made clear, I think, for as many times as we talked about it. But here's the Cliff Notes version for like this very high level opening concept. Markets offer big rewards. Here's the deal. You can make more than a fucking doctor. You can make more than a lawyer. You can make more than a doctor and a lawyer fucking combined. You absolutely can. It is a thing. The probability of that happening is not super high. There's a lot of nuance that goes into that. But the point is that it is a truly possible scenario. I have. And I am a fucking idiot, which is hilarious. Very funny to me. The broader point, though, is markets allow a scalability that is not available other places. Even if you are a highly successful attorney, right? And let's say that that attorney is not running their own practice, because obviously attorneys that run their own practice, if they're successful, can do way better. But let's just say that you're a standard attorney working at a big law firm. You will make a lot of fucking money. You'll absolutely make $250,000, $500,000. And then once you become a partner, you're selling business, definitely over $1 million, well within the realm of possibility. That's a really, really solid path to take. In order to attain that, you have to go to school for a while. You have to do really fucking well in school. Then you got to go to law school. Then you got to pass a bar. I don't know if that's the right order. You get the point. Well, yeah, it is the right order. Law school, bar. And then you have to try to get in somewhere, right? That's a really high-powered firm that's going to pay you those kind of amounts. But guess what? You get into one of those high-powered firms, you are going to work. You're going to work fucking hard. Same thing with a doctor. You have a doctor that's going through the process learning a very highly technical skill. They spend years and years and years trying to develop this skill set. They finally do that. They get out into the world. They start building a brand and name for themselves, and then they become a highly sought after doctor. The time where they're making those really big returns, meaning money from their expertise, is after people have put in quite a lot of time and effort. Trading offers genuinely similar style rewards on average. I know traders that have absolutely done better than a non-trivial amount of exceedingly high-performing professional services jobs. I think most of us do okay once you're at a professional level. The rewards are there, but here's the problem. Most people, they start here. Oh, my bad. Shame on me. I have to get quiet when I do this because it takes a lot of focus to get the right proportions. There we go. So we have a trader here, nondescript trader, and they come across Robinhood, and then they start pressing buttons on the phone, hoping to essentially have a pool full of money. That's the idea. You press enough of these buttons, you make enough money, then you could have a ton of money somewhere else. What that is trying to do, if we think of this as a starting point, the start, if we think about these other careers, they'll have like a early middle, the 5-year mark, kind of a tenured professional, and then you'll have a developed. What these people are trying to do is essentially go from here, skip over all this shit, and have the outcome of this bucket over here. Meanwhile, trading, in my opinion, is actually best done in this fashion. just like every other fucking career. It is a stair-step pattern that's built on progressive expansion of our skills up until the point of your skill cap, not gap, cap. That's what's going to shortchange you from being able to take the next step, is whatever your skill cap is. That skill cap can come in a lot of different shapes and forms. It can come from you being such a good trader that you make a bunch of money, you scale your account, and you scale the account so much that you no longer can trade the things that you traded in order to scale the account. That could happen. That's not the case for most people, but that can happen. The point is, the idea of building a scalable trading approach is embracing this trajectory. Okay. Is embracing this trajectory. And the whole point of accepting this upfront is so that we can build a process that allows us to do this. What does that mean? Well, it means that our starting goal is not to take the $10,000 account we have and turn that into 10 million. It's accepting the fact that there's going to be a lot of things that has to happen between these 2 points. So let's talk about how we can set up our growth trajectory to then scale appropriately. We have to clear all this out. So we know all of the basics at this point. I'm not going to belabor the points of trading plan, trading logs, risk management. I'm taking all of that for granted here, like the fundamentals of being a trader. So essentially, if we think of the starting point over here, starting point, I am talking to you and this group as if we are about here. And I would consider this year 1 to 3, somewhere in that time frame. And this is, again, where we have the basics out of the way. We've gone through this stage over here, which really is typically sub-year, I think is pretty fair. I call this blissful ignorance. This is where we tend to think this is going to be easy. This is going to be fast, easy money. We're going to be able to just do this with low effort. We're going to trade this one strategy and we're going to make a ton of money. No problem, right? Super easy. Blissful ignorance. That's this shaded area. And this shaded area also happens to be where we start to see the overwhelming of majority of traders fail. So again, call this the 90%-ish. And then as we know, the 5-year time frame, this is where the total attrition typically rises to the total of 95%-ish, where then you have a 5% remaining-ish cohort of traders that have figured it out within this time frame, have built something that they can continue to maintain and grow. And it's now part of their skill set. It's a core competence. The majority of people are going to wash out in here. So let's talk about the traits of these different groups. And I'm going to switch from that little ladder thing to like a time series. And that's supposed to be an S, not a 5. I don't know why I defaulted to that. So we have a start, and then over here, we're going to call this professional. Now for professional, there's not really a time amount. I'm ballparking it. Like we say in the Marine Corps, we train to a standard, not to a time. You can become a professional faster than this. But for context, typically mastery is around the 10,000 hour mark for skilled effects. Again, give or take. And for context, that essentially is 5 hours per day for 5.5 years without missing a single day. That's how you hit 10,000 hours. Yet, most traders, again, mistakenly think that they're going to somehow hit mastery level within the first 5 years. But let's talk about this first 5-year mark that I talk about, this fabled 5-year mark. Now, this again is blissful ignorance. And this is essentially going to be coupled with randomness, mistakes, and the blissful ignorance section, I think, is about 1 year. So to tie that over here, this is where nothing is really happening. You're not doing anything really productive. You're just kind of fucking around and probably losing money. Like, that's what's happening in this first year mark for most people. Now, there are some people that take a different path. I absolutely did myself. And this is one of my very, very sincere hopes. This is why I'm doing this at 1800 on a, what is today? Wednesday night with you all. Is my sincere hope is to try to expose people to this sooner so that we don't have to waste this much time and money to figure out that there's some shit that we got to do in order to make this work. So now we come to an important turn after the first year mark or so. And this is where I call the overwhelmed phase. And that essentially spans somewhere in here. The overwhelmed phase is kind of specific. This is typically post Dunning-Kruger. This is generally when we start to identify the challenge. We understand the opportunity. And we know that there's a lot of work to do. So this I generally would attribute to be essentially between year 1, year 2, something like that. And overwhelmed is tied with other things. It's going to be tied with fear. It's going to be tied with hesitation. And essentially, this is the analogy that I think makes sense. I'm kind of making it up as I go, so it might not be the best analogy, but work with me. I'm thinking of it as, imagine you're walking on a tightrope. And let's say that you stand on the tightrope, or maybe it's like 2x4s, right? So it's maybe more applicable to people. Most people can walk on a 2x4. And you're walking on 2x4s, and you're just kind of having some fun. You look down, you can see the ground on both sides. So it's low risk. If you fall off the 2x4s, you're good, right? You just kind of walk on these 2x4s because it's fun to balance. What ends up happening in the trading analogy is at some point you look down and you realize that it's not the fucking ground. It's fog. It's something else. But you now realize that there is a big ass fall that can happen on one misstep. You had been walking pretty comfortably on it. Blissful ignorance. You didn't think it was anything, didn't think anything bad could happen if you fall. But then you finally realize that you can fall. And if you fall, you're fucked. This is when we hit the overwhelmed phase, because now there are big stakes that we identify. The thing that we had been doing relatively successfully has now just gotten jacked up in our mind in terms of severity. And now we're struggling to even take the next step. We're scared. We don't want to take the next step because that one might make us fall. This is when we're in the overwhelmed phase. And there's a couple things we can do to overcome it. I got to pop the door for Thor. And this is why I wanted to talk about this tonight with you all, because I think for a lot of people, this is likely where a lot of people come across the Outlier community, my community. And this is also probably where you start to get overwhelmed plus, meaning even more overwhelmed, because now we know that there's a lot of work to do. There's a long way to go. This stuff's complex. And then you're going to start hearing terms you don't know. You're going to understand that there's a whole other level to this stuff that you didn't know exists. You're going to see the business side of trading, which is kind of ugly. It's going to look like research, which is time consuming. It's going to look like trading plans, trading logs, AARs, all this shit that you have to do. And you're like, damn. Not only do I have to learn the fucking markets, but there's all this shit that I don't even know where to go. I don't even fucking know where to go from here. This is the cohort we're talking to today specifically, because once you're past this stage, you're kind of good. You're generally on a glide slope. And if I grab the website really quick to give you an example of this, and I think it's on this one. Yeah. And if we take a look at essentially the Dunning-Kruger effect as it exists here, you'll notice that we have the skill gap peak, Mount Stupid, whatever you want to call it. We go through here and then we get to a point where this is known as the slope of learning, slope of enlightenment, again, whatever you like to call it. But the main point is that you start finding that this is doable. There's a way to approach it that's scalable, that we can maintain going forward, that will eventually get us to where we're trying to go. So the hope is to tackle this stage where we need to start turning things into action in order to see the outputs that we want. So this is, again, specifically for this overwhelmed group, typically. So let's talk about the overwhelmed group and what's going on here. My guess is there's no shortage of you in the stream right now that have felt this or do feel this. So let me ask you, what are the main contributors to feeling overwhelmed? My guess is that there will be quite a few to pick from. So I would love to hear some of your thoughts. There's a bunch that come to mind, and we're going to talk about 3 of them from my perspective and the fixes for all 3 of them. But I want to see your perspectives as well. So talk to me. What is some of the primary contributing factors to feeling overwhelmed, in your opinion? And I will list out a few of mine. So Travel says, big mistakes. I knew this was going to happen. So Thor heard something in the house. He thought it was Mel getting home. She's not home. So I opened the door to let him out. And then I closed the door again. And now he's scratching at the door because he's like, well, damn, I went out, I looked, there's nobody here, but now I want to come back in, bro. Hodge says no true understanding of concepts. So lack of competence. Reese says learning one thing shows 5 things to learn. Fear of losing. Travel says too many choices. Lauren says legs are too fucking long. Shamgar says made it too difficult too fast. So that's tons. Notice how many inputs there are here to this concept of being overwhelmed. Now, the cool part is, like any sort of really big problem, we can break it up into smaller pieces and then we can successfully navigate it. So we'll talk about that in a second. I got to pop the door and let this gremlin in. I'll put you guys over on this one so that you guys can hang out for a second. We back at it. I realize that Mel's not here to feed him. So if we go to, we'll probably have to end in like at least 20 minutes so that I can feed this beast. So let's talk about 3 big fixes here. So first one, these are the 3 that I have listed out. One is too many choices. 2, I'm literally looking at my notes that I wrote out. Analysis paralysis. 3, complexity. To me, the overwhelming number of inputs to being overwhelmed stem from these 3 buckets. And we've talked about a really simple framework before for getting better at this thing. So let's talk about too many choices. Too many choices is stuff like you're trying to do everything, you're switching stuff at random, you're trying to redesign everything from your own perspective, your own lens, instead of leveraging what exists. It's when you can't create order out of the number of potential avenues because there's so many different avenues to pick. It's those kinds of things. Analysis paralysis is when you begin testing something or exploring something or learning something, and then you get into this unhealthy cycle where it becomes ad nauseum. You are just doing it over and over and over again in all these different permutations, and it's this process that continues to grow voraciously. And then for complexity, it's when we continue to try and add more elements to what we're doing in order to make it better, but it begins to slow us down in the broader sense because now there's an additional thing we have to do. Maybe RSI will make this strategy better. Well, now you have to go look at RSI and all the different instances, see how it does. Oh, wow, I wonder how RSI would do compared to slow stochastics. Let me go look at that. And then so on and so forth. So there are some really simple fixes genuinely for all of these. And again, we're going to go over them now. I'm going to walk you through how to break through this overwhelmed path and to create a scalable learning and trading approach. Meaning you're trading in your 1 lots now, but you're scared to go to 2 lots, or you're not trading at all now because you're scared to place a trade. It's just a progression, and we can outline and build the progression together. And then tomorrow for the case study, what I'm going to do is use an actual scenario on how to build a timeline and then the very specific steps to do in different windows for the timeline. And the reason why I'm telling you this on this stream is if you should do that. And it's because I think going through that exercise is what starts to turn this stuff into action versus just ideation, which is good, but sooner or later you got to start doing some shit. So let's talk about how we overcome too many choices. The easiest way to overcome too many choices, first step, is define objectives. We have to be specific. So an example of defining objectives is, why are we trading? Trading to make money. Okay, great answer. Superficial answer. Pretty much useless answer. And getting to the base of true objectives is actually what I spend a lot of time with people, both in the mentoring sessions, on these kinds of conversations, even when I'm talking to veterans, is because most of us, we throw out a very superficial objective, and then it really doesn't help us. It adds no clarity because it's so superficial. So an example of trying to action on this and take it further is essentially what we talked about last week, starting with the money mindset exercise. And it doesn't have to be that. It can be anything. But the point is to start with an actual in-depth analysis of what the fuck you're trying to do. So here's an example of a good objective. Right now, I am a person, I've been saving a little bit. Let's say I have 25K. And let's say that I've been trading for 4 years now. I have a good job. I'm able to save a certain amount of money. Let's say I can save on average $800 per month. And I'm trying to figure out, when the fuck can I retire? Let's say in this scenario, I don't know, I have no idea what metrics apply to these numbers, to be honest, like what age this would be. If you have any idea for an average, maybe what, 20, this would probably be high for a 25-year-old. This would probably be okay. Let's do like a 25-year-old. I'm just fucking guessing, but their savings aren't going to be this. I don't know what a 25-year-old savings would be. Maybe $500 a month. Because at that point, you should be in like a decent job. And we're trying to figure out, how long do we have to do this game? How long do I have to keep sucking up to a boss that I don't really like, or doing things that I don't really like in order to make a living and, you know, escape this rat race? Perfect time to define your objectives. So the objective is pretty easy. The objective is financial freedom. Okay. So now we have to do some more homework. We need to quantify what that means. And for those that are in the Outlier Trading Pairs program, when I had you all work on the financial, or the money mindset exercise and then the millionaire roadmap, this is where we take the outputs from the money mindset exercise, we quantify them, and then we create a range. So when we quantify it, we could say minimum viable threshold might be something like 3K a month. Optimal might be something like 7K a month, depending on where you're at. So this is the next requirement, is to sit down and do the fucking work. This is where people get gummed up. This is why we get stuck with too many choices, is because we're sitting here letting ideas swirl around, all these ideas, all these things that we want to do, but we're not taking the time to actually sit down and think about one of them through its entirety to what we need. And what you need from the objective of financial freedom is you need to quantify how much money you need. That's what you need. So now let's say we feed this input back up into this scenario, into this person's scenario. And we're trying to figure out, how can I make $7K per month? Okay, guess what's next? We do some homework. I gotta hide. It's literally why I built this calculator. It's because I use it straight up all the time. So we have 2,500 bucks. We're saving on average 500 per month. Right now we're 25, so we got at least 20 years in the pipeline. And current rate of return 10%. Let's say that we get like a 5% variance off of that. And let's see where that places us. Well, that places us in 20 years at $511,000. And if we said that we want $7,000 per month, we need to figure out what a reasonable rate of return would be required to achieve that. So now let's add that into our model. So $7,000 per month, we're going to need some sort of return in order to hit that. If we think about the average market return, it's about 8%. If you're trading and doing this, ideally we're outperforming that, but we want to plan conservatively. So maybe we plan using something like 8%, 8% target return. Now we literally just have essentially an equation we need to solve for. We need to figure out at what principal amount earning 8% per year gives us $7,000 per month. And this is how we quantify what we're trying to do. And here's the uncomfortable part about this. It's probably going to be a much bigger number than you want to hear, but it doesn't matter. This is another really common issue. Oh, there we go. Crude oil's dipping again. You guys see that? Damn. About time to place a trade, eh? So if we take a look at what? 1.25 million, multiply that by 0.8, that's 100,000. Divide by 12 gives us 8,300. So it's a little high, maybe 1150 times 0.08, 92, divide by 12, 76. That's about right. So we need essentially 15000. This is what we need in order for this target. So now the question becomes back to our model. How do we get that? Well, I'm 25. I'm going to have 20 more years. I'm a young professional. I take a look at the comps in my career field and I see what's possible if I continue on the glide slope. If it looks like for the next 20 years, it's going to be about what it is now, and I can't save anymore because of whatever reason, maybe I need to look at expanding my timeline a little bit. So instead of being able to pull the plug at 20 years, might have to do another 10 if those other things aren't possible. If those other things are possible and we find that we're able to maybe expand our savings to try to salvage this time, this runway of 20%. And let's say that for the first 5 years, we expect it to be $500 per month up until we're 30. Then for the next 10 years after that, we expect it to be $750 per month, or whatever the math ends up working out based on the duration. Again, you can get as specific as you want. So then we can say, so for year 1, 2, 3, 4, 5, and I did 6 just because, overachiever. And we go down here to 20. And for the first 5, we think we're going to be able to save 500. What I'm doing is I'm literally just creating a weighted average of the savings amounts over the expected durations. So then the next 10 years, I think it'll average, or maybe the next 5 years, I think it'll average out to 750. Then might drop a kid, go for the album, and this might drop again to 500. And then at this point, I'm a pretty seasoned professional, should be able to leverage my experience. And then this is what I think I should be able to save. So this we now can sum this up. This is over a 20-year horizon and on a per monthly basis, by the way. So it comes out to 687.5. So this becomes terminal, what we think we can do. 640, no good. So now we have some more choices. We have more things to look at. Again, one, we can extend the timeline. This is the worst case scenario. So based on this timeline, it looks like it'll probably be, didn't mean that. It'll be about 26 years in the worst case scenario based on current balance, steady contributions that we've accounted for over the next 20 years on average, using a current expected return of 10%, and cool. Then we can take a look at different return profiles. Maybe instead of 10%, we become good at trading. Maybe we can, instead of 10% on average per year, we can earn 15. Well, if I take a look at 15%, where do I see that crossover for 1.1 million? I see at the 15 handle that occur here at year 20. So if I can hit that 15% return per year, maintain that for 20 years, along with the rest of the metrics from a savings perspective, I can cut 6 years off of this. So this is the broader planning perspective. I don't want to get too gummed up here because we don't have too much longer, but I'm giving you a literally specific example on how to actually build the goals that feed into this broader process. That's what that is. So we define our objectives, we quantify them, and then we actually have something to plan off of. From a trading perspective, now we have answers. From a trading perspective, we now know how much money we need to make on average per month in order to earn that 10% or that 15%, whatever the target is. So then we start from core principles. We don't worry about what ticker to trade. We don't worry about what expiration is best. We start with profit mechanisms. We start with how things actually make money. And then we steadily dial in from there. So from a choices perspective for goals, we first need to start with building out whatever our targets are. From there, we need to figure out how do we hit those targets with respect to the actual skill set of trading. I think a great initial starting point is to pick a bullish, bearish, and directionally neutral trading strategy to be able to essentially trade all directions. I think that's a great starting point. You can choose another starting point. You can choose to just try to be a day trader and to just trade a certain thing every day and see if that works for you. The point here is to pick a few things. How do we pick a few things and think that we're not wasting our time? This goes back to not reinventing the wheel. We have to, the reason why people bounce between day trading, swing trading, this other kind of trading that has another weird name, and all of these other kinds of things is because there's no confidence in the actual strategy that's being ran. How do we develop that confidence? The way we develop that confidence is by starting with things that we know work and exist. Market exhibits positive drift. I just told you what the average market return is per year. Why is it that the average market return per year, 8 to 12%, depending on the time frame, is what it is, but then so many traders can't be greater than fucking zero? Why is that? It's because the trader thinks they're better than that. They think, well, if I'm going to waste the time doing this, I should get a better return than that. That's a completely viable goal in the long term, but you're not better than that in the beginning. The market return is a great starting point because we know it's there and we know it's persistent. Then you can start building off of that if you're so inclined. But the market return is a great place to start. Whether you choose to expose yourself to that through direct beta, buying an index ETF and then slightly optimizing it through a coverage triangle. Or maybe you start to take a little bit more beta to get a better return and trade a leveraged ETF. But that's a perfectly rational starting point. The thing is everybody's trying to find the super secret silver bullet that's going to make them a bunch of money super fast. And it might exist, but it's going to take some time to find it. And if you waste less time in the beginning, you'll be far better off for it. So then that blends us into the last two things. We now know what we're doing. We have our number that we need to hit. We have our reference timeframes, 26 years in a slower pace. Quicker pace could be something like 20 years if we're able to hit a 15% return. So now we have a range that we can work in. We now know what we need to make on a monthly basis because we can reverse engineer where we are today compared to where we're trying to go in that 20-year time frame. We now know exactly what return we need, which is 15% if we want to hit it in 20 years. The next question is, how do we get 15% per year? We start by looking at known effects that have already been around and they're quantifiable. And we say, can I make this slightly better? Rather than buy and hold, which will have really big down years, can I make this just marginally better? Maybe I don't have to have the same drawdowns than the market. That can accelerate it quite a lot for me, actually. So we start there. Notice how this starts peeling away analysis paralysis. This starts adding a lot of specificity to the complexity that exists because there is a defined path that we're trying to take that starts slow and then can ramp over time. The reason why this starts slow using a market return or something like that is because it's accessible and it's what you get essentially for doing nothing but taking the risk. You can use that as a planning factor. Then, while you're looking to optimize or slightly enhance your market risk, then you can start tinkering with different ideas. You could be paper trading in the background. You can live test ideas, and you can see maybe there's other things you can monetize. But the reason why you don't stick to those other things in the beginning is because you don't know if they fucking work, because you haven't done anything to figure out if they work. So then you're just bouncing between things because there's zero confidence in any of them, and you're hoping that something sticks. That does not work. Sorry, it is what it is. The sooner people can get over these kinds of details, the sooner you can start making meaningful strides in what you're trying to do as a trader. So now, the next step in what we're going to do in the case study tomorrow is to add the actual structure around all of these concepts. We're going to start from a starting point. We'll pick whatever it is. We'll figure out what our objective is. We'll make it relevant to the people on the stream. And then we will literally get specific. We'll say, okay, how do we gain the market beta to start? What would make sense? How do we slightly optimize the market beta? What makes sense? What should we be doing in tandem while trying to optimize this market beta? How do we efficiently test ideas on the side? Meaning, as your main portfolio is working, how do we efficiently test ideas so that we're not bouncing all over the place? That's the next step. That's how you take these concepts and you build them out into something that is truly scalable and sustainable. What's not sustainable is randomly bouncing around, hoping that something is going to work. And if you don't know upfront what might work, you're already starting the game on hard mode. We already know what works. You can see it. You can see research about it. Momentum works. Post-earnings announcement drift works. Market beta works. And if you don't like these ones because the returns aren't good enough for you, then guess what? You need to figure out something else that works better. Do that work then. If you don't know what else works and you're not sure where to start, guess what? You're not too good for these other effects that we know work. You're not too good for it. You can start there and then you could build your skill set as you grow. This is how we get through this overwhelmed stage where we're scared, we don't know what to do next. This is exactly the core concepts to apply to that. And then tomorrow we'll go through, again, like the broader case study. But before we hop off, I want to see if there's any specific questions on what we talked about, any areas that we are not clear on. I want to make sure that if you're going to try to do this exercise on your own, that you feel comfortable with what you want to try to do so that it at least makes sense. Hodge says, get 9 streams revenue so you can save and study at the same time. Honestly, joking aside, if you look at the millionaire roadmap, and if you look at the broader approach that I talk about taking to do this, like the actual path to become a millionaire, there's 3 primary levers you get to pull on. The first lever is your savings rate, meaning how much of your income are you saving? The second is your income. How much money do you make? How can you make it better? The third is your investing returns. How good are you at trading and investing to amplify the annual returns? The problem that people run into is that when we look at these things, they start to identify that there are actually some really difficult concessions that have to be made, and we're uncomfortable with that, right? We don't want to wait 26 years. That's too long. Guess what, bitch? Get better, make more money, do something else. Well, I don't want to go back to school. That's kind of annoying, to make more money. Okay, bitch, then wait 26 years. Well, I still don't want to do that. That's a little bit too long. Okay, bitch, get better at trading then. Well, it's difficult. I really don't want to spend that much time on it. I really want to have my freedom. I don't want to be in front of a screen. This is what people do. This is the exact dialogue people have with themselves because they are trying to just build something that is purely optimal for them, not accepting the fact that in order to do this whole thing, it takes some compromise. So figure out the compromise, be comfortable with it. If you can do that, that's why there's so much opportunity here. That's why for something that requires no education, it requires no certification, literally can make more than doctors, lawyers, business owners. It literally can make more than all of these different things. There has to be a cost associated. This is the cost. So embrace that cost because most people don't. Most people wash out. And then that's why the opportunity is still there for you. So be thankful. It's difficult. I try to remind people of that exact concept. If this was not difficult, the opportunity would not be there. It would be priced out. So the fact that it's difficult, you should be thankful for. I'm thankful for that. Plus, also, admittedly, it's kind of easy for me now. So it's easy for me to say that. Sorry. Oh, Lauren just hooked up 5 people with Outlier trading memberships. Thank you so much, Lauren, for hooking some people up and supporting the channel. Very much appreciate it. If you guys need anything, let me know. Hit me up. Be an outlier. I'm going to go feed Thor. See y'all later.